on everything that we've heard about the FCNR bonds. We've got Mr. Murali Vaidyanathan, the business head of liabilities at Equitas Finance Bank, joining us on the show. Mr. Vaidyanathan, hi, good afternoon. Good to be speaking with you. And FCNR deposits, they've been a key focus area recently. It's been the talk of the town. Could you share the growth witnessed in FCNR deposits over the last year for Equitas and how the traction has evolved so far in FY27?
Good afternoon. Thanks for the opportunity.
Good afternoon.
See, this is a very important decision for banking as well as liquidity management at India level. If you see it, when there is a liquidity crunch, when there is a stability of inflow of money that is needed for the banking sector in totality, this special swap window which RBI has given between June 8th and September 30th can be a game changer for consumer and for banks at this point of time. We recently entered into AD1 business 6 months back, and as a ballpark figure, we offer now in 3 currencies, normal FCNR, dollar, euro, as well as pound. But whereas for this scheme, we offer only on dollar at this point of time, we are seeing a good consumer as well as NRI support for this. We have close to 40 million of FCNR deposits mobilized in last 4-5 months. So I think that the special rates on with the special hedging opportunity provided by the RBI, this can open a largest window for us, for consumers across the globe. And as Equitas Small Finance Bank, we offer one of the best rates at 7.13 for dollar deposits. And more importantly, we have our NRIs supporting us from across 170, 180 countries across the globe. So I think the reaching out to them and spreading out to them and giving the best window is going to be the next phase of activity.
Mr. Vaidyanathan, good afternoon. Ashesha this side. If you can spell some more details with respect to this, which geographies are contributing the most to FCNR deposit mobilization? And are you seeing any notable shift in consumer behavior across markets?
Yeah. See, markets are categorized one into Middle East, that is UAE, dominating there. Then you have Europe. In Europe, we have specific pockets of consumers, blue and white collared, who are supporting us. Then you have US, and last is Australia. In that sequence, we have major money coming in at this point of time. Presently, you don't have a long-term instruments available at this point of time, which is attractive for NRIs to deploy their money in foreign currency. Through this scheme, now what's going to happen is 3 to 5 years is a sufficient midterm, to a reasonable long-term for a consumer to get a fixed return without currency volatility. So I'm seeing at this point of time, our NRI population from US, Australia, and Europe actually significantly jumping into the wagon. And most importantly, since there is no currency risk, where there is no conversion, they are going to hold it in dollars. We are going to see a dollar inflow from these places where the local attractiveness towards the dollar rates are far lower than what this scheme can offer at this point of time. So I can confidently say at 7.13%, for 3 to 5 years window, if a consumer stick to us, I think these returns are better than what they would have got through any other alternative investment which they are seeing outside. So stability, assured returns, and market-specific opportunities is what we are looking at it.
Understood. Mr. Vaidyanathan, this 7.13% rate that we are talking about right now is an increased rate, right? You've recently increased this rate. Talk to us about what has given you the facility, or what is giving you the power to increase this rate internally. Also talk to us about in terms of how this stacks up versus your peers. And on the back of this rate increase, what part of your overall deposits in FY27 do you think will be contributed to by NRIs?
See, there is always a swap cost, okay, where after taking a FCNR deposit, we go and then take the positions from outside or in the open market. Today, what RBI has said is that swap for this particular period will be absorbed by them on the principal component, whereas on the interest component, I have to still go for a cover, which means earlier, what we call it as ANR plus hedging cost. Today, that hedging cost is being, or the spread rather, is being with in our hand. We have totally passing out our ANR and spread to the consumer, which works out to exactly 7.13. So we mobilize the money, then go to RBI in batches or in weeks, and then swap it. So which means a swap cost not being applied is passed on to the consumer, is giving the biggest upside to the consumer. And this is significant because normally a swap cost, anything for a year or 18 months bucket goes anything between 2.3 and 2.4. So it's important that these people use that actually to attract customers. So I foresee at least every NRI who is holding money in rupee to have some position taken on foreign currency to hedge, because hedging is a natural opportunity for NRIs to get in. And relatively, what I find is the number of people who are having FCNR deposits in last 18 months have come down. This special scheme of cost being absorbed, that is a swap cost being absorbed by RBI, giving them the incremental 2% or 1.5% or 2% is the differential what they are getting, making now at this point of time an FCNR more attractive proposition. And we expect at least to double the book in coming days. See, we are not present in Middle East, or we are not present. We have customers present. So reaching out to them and getting a new to bank customer on a non-face-to-face is a process by itself. But I still foresee a huge, a set of people, existing people moving into foreign currency, and also new to bank customer coming in.
Okay, and given your current CAR position, is this raise primarily to support 20% credit growth guidance, or does it serve as a buffer, given that you have already made an application for universal banking license?
See, universal banking license is a different subject. We will touch that. But this is to support our growth. Absolutely, yes, you are right. See, once the money comes in, then it is deployed in our market only. And as you know, for us, we operate on duality, where we take care of underserved segment on one side through lending, and we need overserved customers to come in through the price point and better service. So I think for the first time, NRI population can participate in India growth story and India building story through this FCNR scheme.
Mr. Vaidyanathan, we would love to continue chatting with you, but due to paucity of time, we'll have to end this conversation here. But thank you so much for your time today.
Thank you.
Good to be speaking with you. Thank you so much. Viewers, on that note, we're completely timed out on this edition of Markets at Noon. Thanks so much for tuning in, but keep watching ET Now, because all about your company takes all the action ahead.